Hello everyone, welcome to Elliott Wave Forecast.com YouTube channel. This is Henry, and today is Tuesday, March the 2nd. The time is around 4:30 a.m. GMT. So today we are going to give you guys an update on silver, right? This is a 60-minute chart. Now you need to to watch the entire video to be able to understand exactly what the bias is and some sort of alternatives that we are looking at. Okay, so simply if we just take a look at the 60 minutes chart again, you won't have too much information, but what it is basically seeing we are within the wave C to the downside. So if it is in the wave C, then this is actually a correction within a bullish trend, right? So within wave C, you will have a 5-wave subdivision, a zigzag ABC in the C wave is 5 waves, and we are already showing a 1, 2, 3, 4, 5. So we have clearly seen a 5 waves down, and so here we are calling this to be a wave 1 of C. So in other words, after we end this 5 waves down, we should be getting a bounce, a decent bounce. It can go back to $27, for example. All right, and then as far as it stays below 28.3 here, we can go lower again to continue the wave C. So imagine this is wave 1 of C, 2 of C, 3 of C, 4 of C, 5 of C before it completes the C leg. Okay, so let's take a look here, guys, at the daily time frame first. Now this is to give you a very good context. Now I already have this chart last month when we are doing some sort of article on silver, right? So at that time there was a silver squeeze event on one Monday, and then we actually kept up like 10% or something. And with that gap up here, guys, a few weeks ago, we basically broke above that previous peak last year in August at 29.8. The high this year is around $30, right? So you can see since we bottom in March, this is the same time indices bottom during that COVID-19 sell-off. You know, everything sells off, everything sold off at that time, right? Now we can see this one. If we label this rally, which looks impulsive here, like a wave 1 or wave A, your choice whether you want wave 1 or wave A, it doesn't matter, right? And then the pullback here ended in September 25th as a wave 2 and wave B. Now this pullback right here more or less has been confirmed. Why? Because we already break above this previous high. So we got a high here. Now even if it is an ABC, right? Now by default, ABC is not very bullish. If you're bullish in silver, you should label this 1 and 2. But let's say if this is ABC, typically in the C leg of an ABC, can go to as high as the 100% extension, right? At least. So it can go to 39.9, for example, right? 39.9 if this is an ABC. So it has not reached that 100%. So chances are we can still see further upside as long as we stay above this September 25th low, $21.66 right here in silver. Okay, so that's the idea. Now we also have a 5 ways up here. Look, 1, 2, 3, 4, 5, very clear 5 ways up. Now again, people will ask if there's an overlap, and so again, overlap is the most misunderstood rule in Elliott Wave, but that's a topic of a different day because so many people always ask the same question. You can always have a diagonal here, right? Within wave 1 you can have a diagonal, so you can have an overlap, no problem. And then you can have a, now we're looking for a clear you see this sell-off after we got that 10% gap was what looks like a 5 ways down, looks like an impulse, and that's why we've been calling for another leg lower, right? We've been calling for another leg lower for a long time. That okay, it looks like we might be able to get a pullback from that silver squeeze event, right? Into another pullback before we finally can get support and then rally again, as long as we don't break below this last year's low here, 21.6, right? So then let's take a look. So then if you go back to the 1 hour chart here, So think about it. This is your B right here. This is your B, and this is your A. So now basically you are saying that okay, we are in the wave C. So there's nothing. Yeah, we got a sell-off and things like that, but it's not really something that's totally a surprise. It is actually to be expected since this one looks impulsive. Let me show you in the 4-hour chart. So from February in the 1st, the silver squeeze peak, you can see this pullback here looks impulsive, and then also if you take a look at the RSI and drop to the 1-hour time frame, right? Actually, this one has a divergence. Typically, that's indication of wave 5. So you got 1, 2, 3, 4, 5 with a divergence here. Now you cannot see it in the 1 hour. Again, you have to drop to the 1 hour if you really want to double check. You see this one? You got a divergence here. The price makes a lower low. The momentum does not. It makes a higher low. So that is an indication that it is a 5 ways down, and that's why we've been saying okay, don't get too bullish after that short squeeze because sorry the silver squeeze event, because this one looks like 5 ways, so we can get further correction first. Now the really interesting thing, guys, now is in the shorter cycle. Now the thing is this: typically an ABC, it can go all the way to the 100%, which is 24, right? You might say, wow, 24, that's a huge drop. Yeah, it is. I mean, it's almost $2, right? $2, that's almost like 10% drop, right, from where we are. But remember, that's just the ideal target of an ABC. The thing is, this is also already 5 waves, right? 1, 2, 3, 4, 5. So that's why this 5 waves here, what is interesting is it can either end with one of C, or right, it either end with one of C like this, or it can actually end the entire wave C as well. If it ends the entire wave C, I could just label it like this. So this is what we call truncation, right? If it truncates, it won't go to the equal leg, and then it will truncate very soon, because we already have a 5 ways down from here, right? So to sort of the minimum requirement for this ABC really is just a 5 waves down here, right? A 5 ways down here, and also a break below that previous low here, right? If we can just break below this previous low here, we just break below here, and then we can see a clear 5 ways down. Technically, you already got the minimum requirement to finish this C. But if you want to have the ideal extension, then yes, we can continue to extend lower until the C in blue equal to the A in blue, and that can give us around 24 and 21.4. This is where strong support should be seen if we ever go here. Otherwise, the alternative is we end a 5 ways down, we break marginally below A, and that completes the structure, truncates here, and then we start rally again. Remember, if we look at the if we take a look at the let me see where it is. Yeah, if we take a look at this daily chart again, we got a higher high here. So we do have a bullish structure in the higher degree. So once we finish this C, we're expecting a strong move. It's going to be a wave 3 of 3, technically speaking. It could be a wave 3 of 3. So it's going to be a strong move on the upside once we finish this correction. This correction has scope, all right? Has scope. I wouldn't say it has to, but has scope to reach the full 100% around 24 to 21.4, right? And if it truncates, then the minimum requirement is going to be a 5 ways down, which we have already seen. We can clearly see in the 5 ways down, and at least breaking below here. So you just need a break below. It's just a 1 cent break, for example, is considered a break, right? So the minimum requirement is a break below here in a 5 ways down. So we already see in the 5 ways down. Now we just have to wait and see a break below here. That should qualify the entire ABC finish. But if you want ideal, yes, the C can go all the way to 24. All right. So that's the update here in silver, right, today, and I'll see you guys again next time. As always, if you want to check our service and get regular updates, you can check our service. We have 14 days free trial, and the link is provided in the description of the video below. See you all again tomorrow. Have a nice day, everyone.